The contraction is upon us. This is Markets with Megan. It is Wednesday, April the 30th. If you like this podcast, please subscribe, hit that alarm bell, share with friends, family, or colleagues. But we're here today to break down what we saw this morning for the first quarter reading on GDP in the U.S. And this is the advanced reading. We'll get a couple revisions for this, but the first reading showed us that GDP contracted for the first time since 2022. Now, this is alarming, and it has set a lot of volatility in the markets today, but let's break down this reading. And what we saw was that imports was the biggest culprit here. Imports took off about 5% of GDP. That's a huge contraction. We haven't seen that type of a jump in imports only a handful of times since 1940 that we've seen that type of a jump in imports. And this is primarily tariff related. And we have talked about this, that we're seeing some front running here in imports ahead of the tariffs. And when we import more than we export, that results in a negative number on GDP. We also saw personal consumption, which makes up about 70% of GDP. That was the slowest gain we've seen since the second quarter of 2023. Government consumption as well, so government spending, that fell for the first time since June of 2022. So we're starting to get some of the effects of the Trump administration, the tariffs, the DOGE cuts. These are starting to show up in data, and what we saw today was a negative reading on GDP. What does this mean going forward? Well, first of all, we have warned about this, that we would see some short-term pain in economic data. It's starting to show up. But also, what does it mean for the Fed? We don't think the Fed's going to do anything in the meeting they have in May. It's too early. We did get some inflation data today as well that shows that inflation is not completely behind us. But going forward, it's going to depend on what does inflation do, what does the labor market do. Right now, the Fed's probably going to be on pause in May. We'll see what happens in the next coming weeks when it comes to their June meeting. The biggest report will be this coming Friday when we look at the payroll reports. That'll be for the month of March. But today, we're just focusing on the fact that we did get that negative reading. There'll be some revisions to that, but the market's reacting in that way. Equity markets are lower today, bond yields are lower, and that's because it's starting to price in the fact that we may be already within a short, shallow recession. Thank you so much. If you want a further history of our podcast, you can go to marketswithmegan.fm. Thank you.